Hello, and welcome to Your Robo AI News. A renewed dynamism is infusing the global nuclear technology landscape. The final days of May and the dawn of June 2025 have brought forth a series of pivotal advancements across both fusion energy research and advanced fission deployment, amplified by significant policy initiatives. We are witnessing an accelerated maturation phase for these critical future energy systems, driven by a confluence of scientific progress, regulatory milestones, and strategic governmental interventions. Let's first turn to the long-held dream of fusion energy. China's experimental advanced superconducting Tokamak, famously known as EAST, has just etched a new world record. Operated by the Institute of Plasma Physics at the Hefei Institutes of Physical Science, EAST successfully maintained a plasma in a high confinement state, or H mode, for an astounding 1,066 seconds. This shatters the previous record of 403 seconds, also set by EAST in 2023. This H mode is a crucial operational regime characterized by significantly improved energy confinement, vital for achieving net energy gain in a fusion reactor. This breakthrough is attributed to major enhancements in EAST's auxiliary systems. Its heating system, for instance, recently doubled its output power, now comparable to nearly 70,000 household microwave ovens. The implications are profound. Sustaining fusion-grade plasmas for such extended periods is fundamental to the engineering feasibility of future fusion power plants. Song Yun Tao, director of the Institute of Plasma Physics, emphasized that stable operation at high efficiency for thousands of seconds is essential for the self-sustaining circulation of plasma, a prerequisite for continuous power generation. This achievement provides vital experimental data that will directly inform China's next-generation fusion device, the China Fusion Engineering Test Reactor, or CFETR, which aims to demonstrate steady-state operation and tritium self-sufficiency. EAST's success also contributes valuable knowledge to the international fusion community, including the multinational ITER project in France. While ITER targets a fusion gain of 10, EAST's advancements in long-pulse operation are highly relevant to addressing ITER's operational challenges. This result firmly positions China as a leading force in global fusion energy research. It represents a more than 2.6-fold increase over the previous benchmark, underscoring substantial improvements in plasma control. For context, while the Joint European Torus, or JET, in the UK produced more fusion energy in a shorter pulse, EAST's achievement attacks a different, equally critical challenge: the duration of stable, high-performance plasma confinement. While magnetic confinement fusion makes these strides, the advanced fission sector is witnessing tangible progress towards commercialization. A landmark regulatory achievement comes from the United States, where the Nuclear Regulatory Commission, the NRC, granted final design approval on May 30th for NuScale Power's uprated 77-megawatt electric small modular reactor, or SMR design. Each NuScale Power module in this approved configuration has a rated thermal output of 250 megawatts thermal, generating 77 megawatts electric. A NuScale Voyager plant can consist of up to 6 such modules, providing a total plant output of around 462 megawatts electric. This is an evolution of NuScale's 50-megawatt electric design, which was the first SMR certified by the NRC in 2023. The uprated design offers increased power output and enhanced economics while retaining the fundamental passive safety features, which rely on natural physical processes like convection and gravity for cooling, eliminating the need for operator action or external power in shutdown events. This NRC approval is the second SMR design version certified for use in the U.S., signifying ongoing maturation in the sector and providing greater diversity in power options. It facilitates deployment, as utilities can now reference this certified design in their applications to construct and operate a Voyager plant. NuScale is actively pursuing commercial opportunities, including work for RoPower's planned plant in Romania, and has 12 power modules in production with Doosan Enerbility. The NRC reportedly completed its review ahead of schedule and under budget, reflecting growing experience with advanced reactor designs. This aligns with stated U.S. administration goals for a nuclear resurgence. The 54% increase in power output per module demonstrates responsiveness to market demands. This approval, coupled with over $575 million in U.S. Department of Energy cost-shared financial assistance for NuScale, underscores the effectiveness of public-private partnerships in navigating the high costs and extended timelines of nuclear technology development. Emerging ventures are also driving high-impact innovations, particularly in microreactors. Radiant, a U.S.-based startup developing portable nuclear microreactors, announced on June 1 the successful closure of a $165 million Series C funding round. This brings their total venture capital raised to $225 million. Simultaneously, Radiant confirmed its selection by the U.S. Department of Energy to receive high-assay low-enriched uranium, or HALEU, critical for testing its Kaleidos microreactor. The Kaleidos is a 1 megawatt electric unit designed as a fail-safe reactor for mass production, intended to replace diesel generators. The DOE's HALEU allocation is for the first operational test, targeted for 2026 at the Idaho National Laboratory. Initial customer deployments are anticipated in 2028. Radiant CEO Doug Bernauer stated the company is ramping up to test the first new reactor design in the U.S. in over 50 years. This dual announcement is a significant vote of confidence. The DOE's provision of HALEU is a critical enabler, as access to this specialized fuel, typically enriched between 5 and 20% uranium-235, has been a bottleneck. HALEU allows for smaller reactor cores and longer operational lifetimes. If successful, Kaleidos could open new markets for nuclear power, remote villages, emergency response, military installations, and direct carbon-free diesel replacement. Radiant's focus on mass-produced portable units also signals a potential paradigm shift, moving away from large, bespoke projects towards standardized, factory-fabricated units for niche, high-value markets. These technological advancements are occurring within a dramatically shifting policy landscape, particularly in the United States. In late May 2025, a series of executive orders were signed, aimed at initiating an American nuclear renaissance. These directives broadly focus on reforming the NRC to accelerate approvals, rebuilding the domestic nuclear fuel cycle, and expediting the pathway for new advanced reactors. A central mandate is for the NRC to make decisions on new reactor license applications within 18 months, a significant change designed to reduce regulatory uncertainty and financial risk. Substantial emphasis is placed on rebuilding the U.S. domestic nuclear fuel supply chain. A key focus is promoting domestic uranium mining, conversion, and enrichment with specific support for HALEU. One order explicitly calls for rapid expansion of these capacities and authorizes a new national uranium reserve, including a 20-ton HALEU fuel bank for advanced reactors. This is critical, as many advanced designs depend on HALEU. The executive orders also explicitly support the deployment of next-generation reactors, directing the NRC to implement a high-volume, standardized licensing process. A stated goal is to enable at least 10 new reactors by 2030, potentially powering AI data centers and federal facilities, with an ambitious overarching target to quadruple U.S. nuclear capacity to 400 gigawatts by 2050. These executive orders represent a profound U.S. government commitment to revitalize its nuclear industry. By addressing regulatory delays and fuel supply vulnerabilities, these policies could substantially de-risk private investment. A core objective is re-establishing American leadership in nuclear technology while reducing reliance on foreign fuel supplies. Synthesizing these developments, several interconnected trajectories emerge. There is a clear acceleration on dual tracks.
Fusion energy research methodically pursues scientific breakthroughs as seen with EAST's plasma sustainment, while advanced fission technologies like NuScale's SMRs and Radiant's microreactors are rapidly progressing through critical regulatory and financial gateways towards commercial deployment. Policy is acting as a powerful catalyst. The U.S. executive orders are actively dismantling specific bottlenecks like licensing times and HALEU availability, creating a tangible market pull for innovation. The strategic importance of HALEU is another dominant trend. It is transitioning from a specialized fuel to a cornerstone requirement for a significant segment of the advanced reactor industry, influencing both private development and public investment. Collectively, these events reinforce a broader paradigm shift towards new nuclear. The emphasis on smaller, modular, factory-built reactors with enhanced passive safety, designed for diverse applications beyond traditional baseload electricity like remote power or dedicated data center energy, signifies a deliberate departure from the large-scale plant model of the past. This aims to improve project economics, shorten timelines, enhance public acceptance, and unlock new markets. We may be witnessing the conditions for a tipping point in nuclear energy. The confluence of decades of advanced research, a recent surge in private capital, and now robust public policy support could lead to a more rapid and diverse deployment of next-generation nuclear technologies than seen in half a century. While U.S. policy is a strong driver, the global nature of fusion research and the nuclear supply chain means international collaboration and competition will remain powerful shaping forces.
In conclusion, the period around late May and early June 2025 paints a picture of a nuclear sector gaining significant momentum. China's EAST Tokamak's record-breaking plasma sustainment marks a crucial step for fusion's long-term promise. In advanced fission, NuScale's final NRC approval for its uprated SMR design and Radiant's substantial funding and HALEU allocation for its portable microreactor signal tangible progress towards commercialization. These technological strides are powerfully amplified by proactive U.S. policy directives aimed at fostering a nuclear renaissance by streamlining regulations and rebuilding the domestic fuel cycle, with a critical emphasis on HALEU. The convergence of scientific breakthroughs, maturing regulatory pathways, strategic investments, and decisive policy interventions suggests an accelerated journey for these vital future energy systems, with profound implications for global energy security and our collective efforts towards decarbonization. The path ahead is complex, but the trajectory points towards a revitalized and increasingly diversified nuclear future. The global energy landscape is witnessing a period of intense financial recalibration and strategic investment, particularly within the nuclear domain. The final days of May and the start of June 2025 have been marked by significant capital movements, critical policy reverberations, and market reactions that underscore the dual trajectory of fusion energy's long-term promise and advanced fission's accelerating path to deployment. A prime example of robust investor confidence in advanced nuclear came on May 30th when Nano Nuclear Energy, a U.S.-based developer of micronuclear reactors, announced the completion of a substantial $105 million private placement of its common stock. This involved the sale of 3.8 million shares at $27 per share to undisclosed long-term fundamental institutional investors. After expenses, Nano Nuclear expects net proceeds of around $99 million, more than doubling its cash position to over $210 million. These funds are earmarked to accelerate the development of its micronuclear reactors, with a sharp focus on its Kronos portable microreactor, a project in conjunction with the University of Illinois Urbana-Champaign, and to support planned geological site characterization. This infusion is a powerful endorsement, signaling that institutional capital is increasingly recognizing the commercial viability of next-generation reactor technologies like microreactors. Concurrently, the US Nuclear Regulatory Commission, or NRC, approved NuScale Power's uprated 77-megawatt electric small modular reactor, or SMR, design on May 30th. This enhancement from its previously certified 50-megawatt electric design marks the second SMR iteration approved by the NRC, a significant regulatory de-risking. The U.S. Department of Energy has notably provided over $575 million in cumulative support for NuScale's SMR efforts. However, despite this positive regulatory news, NuScale Power stock, trading under the ticker SMR, experienced a downturn, closing around $31 to $32 on May 30th, down from its previous close of nearly $33 on significantly high trading volume. This market reaction could be a classic sell the news event, or perhaps reflects investor focus shifting to the formidable challenges of securing firm customer orders and demonstrating cost-effective, timely deployment. Investor and corporate reactions also continue to unfold following the U.S. presidential executive orders of May 23, which aim to revitalize the American nuclear industry. Companies like Lightbridge Corporation, Oklo Incorporated, and Global Laser Enrichment are actively articulating strategies to leverage anticipated federal support for enhancing the domestic fuel cycle and accelerating advanced reactor deployment. While these orders do not immediately allocate new funds, they are profoundly shaping investment narratives and corporate positioning.
Internationally, Sweden's progression with a state aid model for new nuclear, incorporating government loans and contracts for difference, or CFDs, offers a significant framework for de-risking large capital projects, a model that could influence financing across Europe. In the fusion sector, while direct large-scale funding announcements for specific developers were not prominent in this immediate window, programmatic advancements continue. Type 1 Energy Group announced on June 1st the successful completion of the first formal design review for its Infinity II stellarator-based fusion power plant. This design targets a net electric output of 350 megawatts electric and emphasizes economic efficiency and operational reliability, aiming for 2-year operating cycles. The review, supported by experts from Princeton Plasma Physics Laboratory and Westinghouse, confirmed the approach meets industry requirements. This progress, framed within a potential future implementation with the Tennessee Valley Authority, is crucial for validating the technology and attracting future capital, though it did not coincide with an immediate financial transaction in this reporting window. The fusion development path remains R&D intensive, with value creation currently tied to such demonstrable scientific and engineering progress. The release of new market research, such as the Nuclear Fusion Market Opportunities and Strategies to 2034 report on May 30th, also shapes sentiment. This report forecasts the global nuclear fusion market to expand from $178 billion in 2030 to $229 billion by 2034, a compound annual growth rate of 6.5%, highlighting trends like digital twin technology and next-generation stellarator fusion. Such analyses, while not direct funding, provide market sizing that underpins long-term investment theses. Turning back to publicly traded advanced nuclear companies, Oklo, trading under OKL, closed around $52.72 on May 30th, down slightly. The company had recently expressed support for the U.S. executive orders. Despite a significant 399% stock return over the past year and strong liquidity, its current pre-profitability status and considerable short interest underscore the speculative sentiment surrounding its valuation. Lightbridge Corporation, ticker LTBR, closed at $15.05 on May 30th, up slightly. The company sees significant opportunities from the executive orders, particularly for its advanced nuclear fuel technology designed for power uprates in existing reactors, and plans to invest approximately $17 million in R&D in 2025, supported by an increased working capital of $56.5 million. Major utilities with nuclear operations also saw activity. Duke Energy closed up at $117.61. Xcel Energy also rose, closing at $70.2. Southern Company closed up at $90. Recent first quarter 13F filings, reported between May 30th and June 1st, showed varied institutional actions. MassMutual Private Wealth and Trust reduced its Duke Energy holdings, while First County Bank established a new position in Xcel Energy. Kaizen Financial Strategies initiated a new stake in NuScale Power. This suggests a selective, company-specific approach by institutional investors within the broader utility and nuclear sectors.
In project finance, the dispute surrounding the Czech Republic's tender for new nuclear capacity, provisionally awarded to Korea Hydro and Nuclear Power, continues. EDF's legal challenge, aimed at ensuring compliance with European Union rules, has led to a court injunction temporarily halting contract signing. The European Commission is also reviewing potential foreign financial contributions associated with KHNP's bid. This situation highlights the substantial financial stakes and complex geopolitical and regulatory risks inherent in major European nuclear capital projects, potentially impacting financing timelines and costs. Closer to home, a Federal Register notice on May 30th announced the availability of the environmental assessment and a finding of no significant impact from the NRC for Holtec's Palisades nuclear plant decommissioning activities. This regulatory step, while related to decommissioning, is relevant to Holtec's parallel efforts to restart the facility, supported by a conditional $1.52 billion loan guarantee from the U.S. Department of Energy. Streamlining the site's regulatory status is a net positive for the financial prospects of a restart. The U.S. presidential executive orders remain a dominant theme. Beyond Lightbridge and Oklo, Global Laser Enrichment, which is developing a proposed $1 billion laser uranium enrichment facility in Paducah, Kentucky, welcomed the EO's emphasis on expanding domestic enrichment capacity. These directives, while not new appropriations, are strong policy signals expected to catalyze private investment and guide federal resource allocation towards domestic fuel supply and advanced reactors. Sweden's new state aid model for nuclear financing, set to enter force on August 1, 2025, provides government loans and two-way contracts for difference. This is designed to mitigate long-term revenue risk for new nuclear construction, initially planned for investments up to 5,000 megawatts electric. This framework could potentially serve as a template for other European nations. Investor sentiment is further gauged through vehicles like the Sprott Uranium Miners ETF, or URNM. As of May 30th, its net asset value was around $40.35, with total net assets of $1.49 billion. While down slightly on the day, its substantial AUM indicates significant ongoing investor allocation to the uranium mining sector, integral to the nuclear fuel cycle. Sprott's commentary remains bullish, citing the positive implications of the U.S. executive orders and strong long-term uranium fundamentals. Synthesizing these financial activities, several key trends emerge. First, there is a clear growth in institutional capital flowing into advanced nuclear, especially microreactors, exemplified by Nanonuclear's private placement and new institutional stakes in SMR developers. Second, policy pronouncements like the U.S. executive orders are acting as significant catalysts for corporate strategy and investor focus, even before direct funding materializes. Third, the market remains cautious regarding regulatory milestones for pre-revenue advanced nuclear companies. NuScale stock decline post-approval suggests investors are now keenly watching for commercial execution and firm contracts. The financial landscape reveals a dynamic environment. Private capital is demonstrably committing to specific advanced nuclear technologies. Government policy is shaping strategic direction. Yet, the market's reaction to milestones reminds us that regulatory approvals are but one step in a complex commercialization journey. Fusion Energy, meanwhile, continues its R&D-focused path, where progress is measured by technical advancements that build the case for future substantial financial backing. In conclusion, the period of May 30th to June 1st, 2025, showcases a nuclear sector at a financial crossroads. Advanced fission is attracting significant private and policy-driven capital, signaling a move towards near-term deployment and commercial viability, highlighted by nano-nuclear's successful raise and NuScale's regulatory progress. However, market scrutiny on execution and commercialization timelines is intense. Simultaneously, fusion energy continues its capital-intensive journey, with milestones like Type 1 Energy's design review building the foundation for future investment. Government policies globally, particularly in the US and Europe, are increasingly designed to de-risk these long-term, high-capital ventures. The overarching narrative is one of sustained momentum, significant capital inflow into advanced nuclear, and a clear differentiation in the financial maturation stages of advanced fission versus fusion, both pointing towards a profoundly reshaped future energy landscape.